Disclaimer: all my videos are for educational purposes only. I am teaching and explaining investment trading to everyone, but I am not giving out any advice. All investments are subject to market risks, so please evaluate carefully before you invest, as you may lose your investment.
Hey guys, it's so great to see you're back here again. So, in my previous videos, I was giving you some fundamental basics you need to keep in mind before you start to invest in the stock market. And so that's all done and dusted. And now I want to focus on some various terminologies which exist in the stock market, as well as the methodologies one can adopt while investing. So in today's video, I want to focus on something which is called an ETF. So here I'm going to talk about what is an ETF, how they work, the various types you can invest in, and basically why should you even care about what they are. So let's answer the first question, what is an ETF? So you want to know what an ETF is, right? An ETF, or an exchange traded fund, is a type of investment fund that tracks a specific index, sector, commodity, or any other type of asset. It can be purchased and sold on a stock exchange in the same manner as a regular stock. An ETF can be structured to track anything from the price of an individual commodity to a large and diverse collection of different securities. ETFs can even be structured to track specific investment strategies. So, for an example, let's take the SPDR S&P 500 ETF, which from the name itself you can guess, it tracks the S&P 500 index. Now, the S&P 500 index comprises of the 500 most valuable companies with trades on the New York Stock Exchange, like Apple, Microsoft, Tesla, Facebook, things like that. Now, even though it is not technically classified as an ETF, but another way to think about it is you can take the example of Berkshire Hathaway, which is Warren Buffett's investment company. Now, even though it does not exactly comprise as an ETF, but you can think of it that way because what this company does is it invests into different companies. And so if you're a stakeholder of Berkshire Hathaway, you basically own parts of these companies as well, which they have invested in. So some of the companies Berkshire Hathaway has invested in are Apple, Bank of America, Coca-Cola, General Motors, MasterCard, and other companies. So now since we've understood what is an ETF, let's move on to figure out how this concept of an ETF actually works. So let's figure out how this concept of ETF works. So I am going to show this to you graphically.
Okay, so to show how an ETF works graphically, let's say an ETF tracks 4 companies in the banking sector on the New York Stock Exchange. And the 4 companies can be Bank of America, JP Morgan, Citibank, and Wells Fargo, which are very well-known banks. And let's say they all own 25% stake of the 100% of the ETF. And mind you, it's not the 25% of the company, it's 25% of the ETF. So in this pie chart, as shown, Bank of America owns 25%, JP Morgan owns another 25, Wells Fargo owns another 25, and Citibank the remaining 25. Now, let's say if Bank of America makes $10 increase in their stock price, Citibank a $12 decrease on their stock price, Wells Fargo's stock price also decreases by $4, whereas JP Morgan's stock price increases by $30 on their own respective stock prices. Then the ETF as a whole will do 25% of the $10 increase on Bank of America's stock price, the 25% of the $12 decrease on Citibank, the 25% of the $4 decrease on Wells Fargo, and the 25% of the $30 increase on JP Morgan's stock price. So a total comes out to be a $6 increase on the ETF's stock price. Thus, the ETF will have a $6 increase in the stock price, even though we have two of the companies performing negatively. That is why an ETF is a very good way of diversifying your investments, and it also protects you from risk that even if one company's stock price may go down, then the other companies can be depended on so that their stock price can increase and your overall ETF will increase as well.
So now, since we've seen how an ETF actually works, let's move on and now focus on the different types of ETFs which one can invest in. So now let's understand the different types of ETFs one can invest in. So there are a total of 5 different types. The types are bond ETFs, industry ETFs, commodities ETFs, currency ETFs, and no, I'm sure you might be thinking real estate ETFs, but no, that's not a thing, even though it should be. But the 5th type is inverse ETFs. Now, talking about bond ETFs, they are those where they have governmental bonds, corporate bonds, and state and local bonds, which are called municipal bonds. In industry ETFs, they track a particular industry or sector, such as the tech sector, or the banking sector, or the oil and gas sector. Commodities ETFs invest in specific commodities like crude oil and gold, whereas currency ETFs invest in different foreign currencies such as euro, Canadian dollars, pound sterling. Now, inverse ETF is a very unique and different ETF compared to all the other 4, because what that does is it attempts to earn gains from stock declines by shorting the stock. Now, I know you don't know what that means, and so I will be explaining it in very much detail in another video completely dedicated to that, because it's a very fascinating, but it's a very volatile and extremely risky game to play. So I will be talking all about that in another video. But for now, what the shorting of a stock means is that when the stock price declines from its original, then what these ETFs do is that they make the profit in between by first selling at that higher price and then buying the shares at a lower price, so that they make the difference in between. So now I hope you've understood what the different types of ETFs are and how you can use them according to the strategies you want to play with. And they are very unique in their own different way, and they are very useful when you decide which strategy you want to use according to the risk-based investment style you are comfortable with. Hey guys, I hate to break it up, but it's time for me to leave now. I hope you enjoyed this video, and I really hope you learned a lot about this new thing called ETFs, and you got to learn about what is an ETF, how they work, and the different types of ETFs one can invest in according to their own investment strategies. So until my next video, stay tuned, take care, thanks for watching, and I'll see you in the next video.